Alright, so shout out to Matt in the comment section for suggesting 89 bio. Let's take a closer look at the cash flow statement today. I took a look at some of the different quarterly earnings reports. I took a look at some information here about the company and what they do. And frankly, I don't understand the description here of 89 Bio. It's a clinical stage biopharmaceutical company focused on the development and commercialization of innovative therapies for the treatment of liver and cardiometabolic diseases. So already there, the whole business idea is lost on me because I don't have any medical experience or knowledge or even business related experience from, let's say, sales in the area of pharmaceuticals. So I will not comment on the story of the company here or the viability of their products, but the value that I can provide in this case is a closer look at the financials for the company. And let's just break down the cash flows from operations here for the 9 month ended September 30th. So the latest quarterly earnings from the company's website. So in terms of when there's a parenthesis around the statement here, we know that it's a loss, and when it's not a parenthesis, we know that it's positive in terms of cash flow. So we can see the first line here, cash flow from operating activities. It's always divided into operations, investing, and financing activities. So in terms of operations, we see a net loss. However, it's added back stock-based compensation here. First in 7 million, added back 7.5 million. So they pay in stock, but that's not a cash expense for the company. So that's why it's added back. And then we see accretion of final payment fee on term loan. So some sort of fee that's being paid back. This is positive for cash flow. We also see amortization of debt issuance cost. This is also not a cash expense in terms of amortization. It's added back in the cash flow statement. However, amortization of premium on available for sale securities here is negative. So this is drawing cash away from the company, and then depreciation as well added back, changes in operating assets and liabilities. So this is the assets used in operation in this case. So we can see, for example, prepaid and other current assets is something that's not using as much money as it did in the past, basically. So we can see this as positive for cash flow. So basically the only thing they lost is on operating lease liability. So leasing some sort of equipment cost them some money in this case in terms of pure cash. And then we see as well the second area here of the cash flow statement, cash flows from investing activities. So proceeds from maturities of available for sale securities. So they have sold some sort of security here, and by doing that they've been able to accumulate, let's see what this will be, 87 million exactly. And then we also have purchases for available for sale securities. So basically this could potentially be buybacks, maybe. This could, yeah, it's most likely buybacks. 110 million, so it has cost the company cash. They've used cash for securities. Then of course purchases of property and equipment. If you're going to buy some new operational equipment that's not inventory, then it will show up here. It basically has a longer shelf life. Otherwise, if it had a shorter shelf life, we would see it in cash flows from operations. But now that it's a long-lasting asset, it will be in investing activities. And then Of course, net cash used in investing activities summarized here below. So in terms of investing in different areas, they have invested 22 million American dollars. And then we also see the financing activities, issuing new shares here. All right, interesting. Getting some money from that. This is a very big post. If we look at stocks such as AMC, they issue a lot of shares and bring in a ton of money from that public offering. All right, this is new to me, why they're separating it into different categories this way. This is not something I've seen in a cash flow statement before. Very strange, actually, issuing it into this many different types of issuance of common stock. I don't know why they do this, but some more detailed explanation of maybe different types of stocks. Maybe they have some premium stock that's paying interest. Oh, I see here options as well and warrants. So they're issuing some special securities, not only common stock. All right, interesting. And then we also see payment of withholding taxes related to restricted stock units, a tax-related expense on the financing activities. Net cash provided by financing activities, 96 million. Right, so financing clearly covers both investing and cash flow lost from operations. Hopefully, I guess the story for this company would be that they were able to make this treatment of liver and cardiometabolic disease a reality and make a ton of money from this. It would be interesting to take a look at the balance sheet as well in that case, but I think that would make the video too long if I were to analyze this as well. Maybe I will do it in a separate video if there's a lot of interest in taking a look at the balance sheet and dividing up short and long-term liabilities and comparing that to cash on hand to see if there's any risk to the going principle. That's what investors would really know with this type of company for sure. And if there's any other super interesting part about the balance sheet that you would look at in a company like this that's developing new drugs, please let me know in the comment section below. Right, that's been it for this video, and as always, hope you make a ton of money, whatever investments you decide to make. Take care now, bye bye.